Okay, 195. Here we are with the promised video walkthrough of example 9 from chapter 4a. So I'm going to break this down into chunks, and that way you don't have one monstrously long video. We're going to have small chunks which will isolate each different part as we move through the process. So as you can see here, I've got my Excel sheet open. I put in my headings already just because I don't think you guys need to watch me type in headings. That's kind of a waste of time. And then the other thing that I've done is I've put my markup on my paper, and I've also just noting where the key info is that matters. I've also numbered each of the paragraphs. So throughout the videos, I'll refer to paragraph numbers so you know where I'm looking in our sheet. So just to walk you through what those numbers are. So paragraph 1 is the PC sales with the sales forecast below. Paragraph 2 starts with the 40% of sales revenue. Paragraph 3 starts with the units are purchased for. Paragraph 4 is all expenses are paid. 5 is the office modernization. 6 is about the dividend. 7 is the arrangement with the bank. And 8 is the opening balance sheet with all the balance sheet info. So those are paragraphs 1 through 8, and I'll refer to those just to make it simple so you guys know where I'm getting info. Okay, so I'm going to start with our cash receipts here because that's often a great place to start. So we need to first take our sales forecast in units, and that comes from paragraph 1. So we can see our little table here, and we have actual sales for November and December, and then we've got projected sales for January, February, and March. So I just have to type those in. So I've got my sales forecast in units heading. So we have 3,600, then we have 1,500. So those are the actuals. 2,200 in January, 3,500 in February, and March was 3,000. Okay, and you may also notice that I've highlighted January and February because if you have read down to the bottom of this exercise already, you know that those are the relevant time periods that we care about. So we need the cash budget for the first 2 months of 2019, we'll call it. So that would be January and February, and then the same goes through the rest of it. Okay. So the next thing we need to do is figure out our sales price. So if you look at paragraph 1 at the very top in that sentence, it says they retail laser printer that sells for $250. So I put my 250 here and parked it for later. So you can run this all the way across the column and multiply down each row. I'm just going to use my formula here. So I'm going to multiply November by my sales price to get my sales forecast in dollars. And because I've not followed it all the way through, I am going to use a fixed reference with my dollar signs there. So I've got $900,000 for November, and as I drag across, I will get all my figures for each month. Okay. Now, if you look at paragraph 2, it gives you all the details on the cash collections for sales. So 40% is collected in the month of sales. So we'll call those cash sales because, collecting right away. It doesn't necessarily have to be cash sales, but that's what we'll call it. Then we have 50% collected in the next month, and the remaining 10% is the second month after sale. So what I've done is I've parked my numbers here for each portion. So I'm going to go and grab my sales amount here and multiply it by the same month cash sales there. So that, and I will also use a fixed reference because as I drag this across, I don't want this reference moving off my 40%. That would be bad. So I'm going to drag that all the way across and I get my 40% for all 5 months. You may notice like November and December, we don't really care what the total cash receipts are, but I'm going to put the number in there anyways. Okay. Next one is the 1 month lag. So when I'm trying to figure that out for November, I have to put my formula down here because sell it November, collect it in December. So I'm going to grab my equal sign, 900,000 and then multiply it by my 50%. Again, use a fixed reference because as I drag it across, I don't want my reference moving off my 50%. So I'll pull that across. And then lastly is the 2-month lag. So November means collected in January. So I've got to put it in the January column. Grab the 900,000 again, multiply it by the 10%, use a fixed reference there because I don't want it to drag off of this number, and then drag across. Okay, so that is the I'm even going to drag one more. There we go. Because we have February numbers that we're collecting here, I can even drag this one across a little bit more, and this one across a little bit more if I so choose. Actually, I don't think I can. Oh, I can. Okay. But this one, if you notice, if I double click it, it's based on March sales. We don't care about March sales. I'll leave it for now, and we'll explain that when we go to pick up our accounts receivable balance later. So now is when you look at, is there any other cash coming into the company? So we've dealt with all the sales stuff, but if you go down through all the paragraphs here, you'll note in paragraph 5, the office modernization thing, is that they have organized a loan to pay for some capital expenditures. So the capital expenditures are $100,000, and they're going to get a loan of $80,000 to help pay for that. Well, if you get a loan, you think of it as cash coming in of $80,000, and then you turn around and spend it later. So that loan of $80,000, so it says to help offset this payment, a long-term loan of $80,000 has been arranged. Proceeds will be received at the beginning of January. So in this column, we also have a receipt of $80,000. Okay, fantastic. So now that we've done that, there's nothing else in here that tells us that we're going to receive cash for any other reason. So we just need to total up our columns. So total cash receipts, I'm going to sum it all up. And remember, you do not want to pick up your sales forecast in dollars figure because that is not a collection. That is a number that you're using for the basis of your calculations below. So you can put your brick wall in between where it says sales forecast in dollars and your cash sales. So I'm going to grab that. 577,500, and then we also need to do the same thing for February. I put a 0 in the loan proceeds because there's no loan proceeds in February. So I'm going to pull that across. 662,500, and then I'm also going to format my number nicely like that. So with the top and double bottom showing I've got my final totals. Okay, so when you get here, we are asked to do our balance so in prepare section at the very bottom in number 4, it says a pro forma balance sheet for February 28, 2019. So this is our wall here in this regard. So we need to figure out when we're going through our cash receipts, what our accounts receivable is going to be at that time. So we're looking at all the sales made before this dark line, a magic brick wall I'm drawing, all the sales made back here that have not been collected by the end of February. So do we care about, so if you look at this cash sales, this is based on March, right? If I double click it, it's based on March. I don't care what cash sales I'm going to make in March because I only care about sales made to the end of February. So I'm going to delete that number. Do I care about the 1-month lag? Yeah, that's based on February sales. Perfect. Do I care about the 2-month lag here? Yes, because it's based on January sales. So those two numbers are valid. Now going down this column, double click it. Oh, this is based on March sales. Not based on February earlier. I don't care. So I'm going to delete the 375. Do I care about the 87,500? Whoa, it's based on February. Yes, I do. Okay, so that's it for that column. Now I've got this 75. What's it based on? March sales. Again, it's after February, so I don't care. So I'm just going to delete it. So I'm going to actually draw my brick wall here and do a Nice, maybe nice bottom border. Okay, so that's my brick wall. So these are the amounts that related to before February that I'm collecting after February. So these three, if I add them up, is going to be my AR. So I can just go equals this plus this plus this, and I get an AR value of $580,000. So that is these are our relevant numbers for January and February in terms of cash receipts. And we pulled out the relevant balance sheet account as well as we went through the process. So that's it for cash receipts. I'll be back in a second with our purchases schedule and cash payments.